Hey guys, Mike here. Hope all of you guys are having a great weekend. I did a workshop yesterday regarding the disability tax credit, RRSPs, TFSAs, and more specifically the Registered Disability Savings Plan, so the RDSP plan. I wanted to shoot a quick video summarizing my thoughts and sort of the key takeaways for that. If you're interested in sort of what I'm doing in any workshops, I have a workshop in April on sales and marketing. So if you're someone that is thinking about starting their own business or is in business and is interested to know more about sales and marketing, it's a free workshop. It's happening in April. Please check it out. It's at thefinancialmechanic.com. There'll be a link in there to register. It's a free event here in Saskatoon. Otherwise, if you like what I'm doing, appreciate your support. If you can click like, share this to your Facebook feed, go on my website, check it out. Appreciate your support. Okay, let's get into it. So, disability tax credit, registered disability savings plan, RRSPs, and TFSAs. What do I need to know? What's the key takeaways? So, I'm going to speak to the DTC, the disability tax credit, and the RDSP pieces first. So, first of all, in order to actually have a registered disability savings plan, you must qualify for the disability tax credit. So, what is the disability tax credit and what does it mean? So, basically, disability tax credit is a non-refundable credit that you can claim on your personal tax return. So, if you qualify, you claim it on your personal tax return. It's very simple to claim. If you've got someone helping you prepare your tax returns, or if you do it yourself, basically it's a checkbox that says, hey, I qualify for the disability tax credit. So it's very simple. The big thing with the disability tax credit is you have to actually qualify. So what does it mean to qualify and who's eligible? So according to the Income Tax Act and the CRA, anyone that has a severe prolonged mental or physical impairment or infirmity may qualify for the disability tax credit. So basically, the CRA has a lot of guidance online for this. So if you're sort of interested to see if if you would be eligible for this or not, I would suggest just Googling CRA, type in disability tax credit eligibility. And what happens is you have to file a form called T2201. So it's again on Google. If you type in T2201, it's a form. You basically take it to a medical practitioner and get them to certify that yes, that you have a severe prolonged mental or physical infirmity. Once you sort of submit that and you get the AOK saying yes, you qualify for the disability tax credit, that sort of gives you the eligibility to qualify for the registered disability savings plan, so the RDSP. So I know there's a lot of R's in all of these in retirement vehicles, but the RDSP is something that you should be very aware of, especially if you or someone you know in your family has a disability. Definitely check it out. I know for myself, I didn't even know the RDSP existed until about 4 or 5 years ago. And then that's when I sort of looked into this and jumped full feet into say, hey, this is a great program. So one, disability tax credit. So it's a non-refundable credit that you claim on your tax return. So non-refundable means that you don't get it back unless you don't get it back. It's not refundable in nature, but basically what it'll do is it'll help you reduce your taxes payable. And if you are in a position to get a refund, you would get that back. So get non-refundable basically means you don't get it back, but it helps reduce the tax payable for you. So that's claimed on your personal tax return. So one, you have to be eligible for the DTC. If you are, and you're already claiming the disability tax credit on your personal T1 tax return, then definitely look into the Registered Disability Savings Plan. So it's kind of like an RRSP, but it's very different because the government sort of created the DTC and the RDSP to sort of realize that there's unavoidable costs and different things that individual disabilities have to incur that other taxpayers may not necessarily have to incur. So the Registered Disability Savings Plan, any financial institution can create this. So RBC, Scotia. So I'm at RBC, but it doesn't matter where. Scotiabank, TD, the credit unions. Again, all the financial institutions have the ability to create a registered account. Inquire about the RDSP. Now, what happens is, I'm not going to go into too much detail with the RDSP. If you're interested, there's a lot of resources online, or you can send me a message. I'd be happy to talk about it. But basically, it's a government matching program. So basically, it's income tested. So there's thresholds on how much income you have. They look at family income, which includes your income, your spouse's, and if you live with your parents, then of course your parents' income or total family income would sort of be the threshold there. So Basically, if you contribute, let's say $500, you may be eligible to get $3 for every dollar you contribute. So if the first $500, you may get another $1,500, and then it's sort of tiered. So you get $3 for every dollar for the first 500, and then the next 1,000 you get $2 for every dollar you contribute, and then there's a dollar for dollar matching program. Again, the maximum per year right now is $3,500, and the neat thing is that, like myself, I didn't even know the program existed. You can actually go back. So if you've qualified for the disability tax credit for a number of years, and now you're just like, hey, I'm going to open up this RDSP, or maybe one of your family members now knows about it, you can go back and sort of retroactively contribute. So, but there is a maximum of how much grant and bond that the government will sort of contribute. Again, basically they contribute into your fund. So the whole idea with the RDSP is, hey, if you contribute, the government will sort of help you. So there's two components to what the government sort of has. There's a Canadian Disability Savings Grant, and then there's the bond. And the grant is where basically if you contribute, then they match portions based on your family income thresholds. There's a lot, the rules are fairly complex with the thresholds and stuff like that. But again, I recommend you reach out to a financial institution, ask them, they have professionals there, they'll give you some guidance on that. And then there's the bond. And the neat thing with the disability savings bond is you don't actually have to contribute in order to qualify for it, except it is income tested. So again, if you have too much income, you may not be able to qualify for the bond. You can get both, you can get one or the other again. So it just depends on your situation. So again, if you have a disability or qualify for the disability tax credit, or someone you know can please share this video. It's something that everyone should be aware of, that these things exist. And again, it's important that we're educated and know that these programs exist. So that's a disability tax credit. Again, you claim that on your personal tax return. And then the registered disability savings plan is kind of like an RRSP. It's a retirement account. Specifically for those individuals that qualify for the disability tax credit. There's more criteria in terms of eligibility and qualifications. I don't want to go into the nitty gritties, but of course you have to be a Canadian resident, have a social insurance number, and yada, yada, yada. Another piece, this is, so again, if you don't qualify for the disability tax credit, your two main options are RRSP or TFSA. So I wanted to send this video out now because this is sort of the tax season time. So again, for those of you that have RRSPs, just make sure that you understand that you have until the end of February basically to contribute for that first 60-day carryover period. Be careful not to over-contribute. Definitely reach out to your financial institutions to ensure that you're sort of in a position that you're not over-contributing and you're aware of sort of your plans on your contributions and stuff like that. Notice of assessment in CRA's, the portal that they offer is very good. It tells you all of the carry forward balances and stuff like that. So again, check that out. TFSA is very sort of similar. Again, it's a registered account. I get this question a lot is, Mike, which one should I use? Should I use the RRSP? Should I use the TFSA? Which one should I use? Again, not to provide any advice, just financial education. What I tell people is it depends on your goals. So they're both registered retirement accounts per se, but the neat thing about the tax-free savings account is you have a lot of liquidity. So the biggest benefit with that account is, let's say you invest $10,000 into Apple stock. So you buy shares in Apple and it goes up to $100,000, let's just say. So the growth in that account would be tax-free. So if you pull that $100,000 out, you're not paying tax on that $100,000, which is great, because if the market goes up and your investments in the TFSA go up, it's all tax-free, which is wonderful. Another benefit to the tax-free savings account is it provides liquidity. So I can basically withdraw the funds from the TFSA at any point in time. You want to be careful though that when you withdraw and you're going to recontribute, that you're not sort of over contributing, because TFSA has over contribution rules too. Again, be educated, talk to your financial institutions. They'll give you guidance on this, but you just have to be careful. But the TFSA provides a lot of liquidity, which is fantastic, because again, if you have short-term goals, let's say you've got some money laying around and you want to throw it in your TFSA and you're really not sure if that money's you're going to need in the next 2, 3, 4 years, or even 6 months. Again, life throws different situations at you, right? So the TFSA is nice because it's something where you're not really, it can be there for the long term, but it doesn't need to be. It gives you more options. Now the RRSP is a little bit different, because as you may be aware, when you contribute to an RRSP, those contributions are tax deductible. So let's say you can contribute $10,000 to your RRSP and you have $10,000 of income. So basically, effectively, your income would be zero. 10,000 income less the contributions to your RRSP is zero. Again, you have to be careful with how you contribute to RRSP because basically it's not to overcomplicate it, but there's earned income thresholds. So basically, what's earned income? Really, the point of it is as you earn more income, you sort of have the ability to potentially have more RRSP room. There's a pension adjustment and stuff like that. Again, look at your notice of assessment, talk to your financial institutions, make sure that you're aware of your room, you're not over contributing. But not only are your contributions tax deductible, which is great because then you can actually save some tax in the current year when you make these contributions, but in the future, of course, those withdrawals, so anytime you pull money out of the RSP, it's taxable, which means if you pull that $10,000 in the future, any growth and that monies that you pull out, that is all taxable. So, again, it really depends on your goals and your long-term needs. So again, that's what I tell people is, so if you qualify for the disability tax credit, definitely check out the registered disability savings plan. Lots of information online. If you do not qualify for the disability tax credit, and that's not the position you're in or family member's position, look at your RRSP and TFSA options. And again, look at your short-term and long-term needs. So again, hopefully you guys found that valuable. Again, I'd really appreciate your support. So if you guys have friends and family that could use some value out of this, if you could share this on your Facebook pages, follow my page, The Financial Mechanic. I have a website now; it's all up to date. I do workshops every couple months at the North Saskatchewan Independent Living Center here in Saskatoon. So again, varying topics, but I'm doing one on sales and marketing. So if you're starting your business or you're in business and are more curious about how to market, how to grow your business, and really sales tactics and stuff like that, check it out. I think you guys would really enjoy that. But anyway, hope you guys found that valuable. Have a great rest of your weekend, and we will see you soon.